Weekly stock market update, everyone, and an exciting time for you all. I know I've had a hell of a lot of people complaining that the market's up 55% this year, as you will see in a second, and their pension is up 5%. Or up 0 over the last 2 years. And I'll explain to you why that's the case and why you're being screwed by your independent financial advisor or by your employer pension and what you need to do about it. So let's just have a look at price to forward earnings. This just tells us how expensive the market is. I don't want to spend too long on this, but the point of it is this. Most things are expensive, but they've been expensive most of the year, which tells us that actually it's not just valuation as the only thing we need to look at, which is why we, and the way I invest and I show people how to invest, is we look at value, growth, income, cash flow, and momentum, because guess what? The ones we circle are the ones worth having, whereas your IFA will say, oh, well, the reason we didn't own those, we only put a tiny amount in because they're expensive. They're idiots if they told you that. What's cheap? Energy, one of the worst performers this year. And banks, there's some opportunities there, and I'll come to JP Morgan in just a second. Right, so what do we look at? Well, we make sure across 10,000 stocks, we look at the valuation, the revenue growth, the dividend yields, cash return on capital invested. And by the way, that little thing, Goldman Sachs Wealth Management will do for you if you give them $50 million to manage. They'll do that for you. I do it for you as well. 6 months momentum, Sortino and Alpha, and amongst a bunch of other things. So how have things gone this past week? Well, Alphabet, Meta, again, NVIDIA, not too bad. Broadcom, not too bad. Microsoft. Apple's getting a hit because of the watch. We'll see if there's anything to worry about that in a second. Amazon, of course. Tesla, Bright Greens, Pfizer, Costco, which I own. I don't own Pfizer, by the way. CVS, I don't own. Right, and exchange traded funds. I've done a video on YouTube. If you want to see all my links to download my book or learn all this for free, alpeshpatel.com/links. And I've done videos on the exchange traded funds 1 month performance, and I've picked a few of these to see if they're worth getting into now, and that's on YouTube. So keep an eye out on that, and on my Telegram, and on my TikTok, and on my, God, everywhere. This is the important one. So NASDAQ up nearly 55% this year. It was up 55%, it's just come off a little bit. The S&P is up 23%. Is your pension up 23% this year? If not, sack your IFA. The NASDAQ is up 53%. Is your pension up closer to 53%? If you're younger, it should be. Some of my clients who are slightly younger picked more NASDAQ heavy stocks, and they have increased their pension, some of them 100%. But it's most of them better than the NASDAQ because they've cherry picked. But the vast majority of my clients are bit older, and so they've picked out of the S&P 500, and they're closer to getting up to a 25 to 40% return on their pension. So well done them. Okay, we certainly don't want to be getting UK worth results, 11%. Thank you very much. Sorry, British pensioners, you're staying poor for 1 more year. Just a quick look at some of the S&P 500 top stocks, price percentage change over the past month. That's that. I'll do a separate video again on some of these. There wasn't anything that came up which is interesting. It's just pure momentum. I'm not seeing value, growth, income, cash flow. So it's high risk. That's gambling. And similarly with these, not seeing it at the moment. What are we seeing with the S&P? This is really important. Now look at this. Okay, I use the indicators like the momentum indicator here, not the way the textbooks do. And like many hedge funds, we use this. We see that going closer to that direction, and so we remain positive. However, the thing to watch out for is just to make sure it doesn't do what happened here, where we're all fine and dandy, everything looks good, and then boom, and that was COVID. I'm not saying COVID's going to happen again, but let's never get too complacent is my point. Should it eventually get to this kind of a pattern, right, where it's going lower, then that's a warning. So there are 4 stages you need to know with this, and ever I want a traffic light on what's happening with the market. If the monthly MACD is rising, I'm happy, fine and dandy. If it's sideways, slightly amber warning. If it's falling, real deep amber. And if it's falling beneath its own moving average, as it did here, then that's exit time. That's woo, woo, woo. Yeah, crazy time. Now, the UK market, the UK economy might be in a recession, which usually means the bottom of the stock market. So we might have hit a bottom. We might have hit a bottom, and that might start recovering. And there is some talk Europe might do better, though they mean mainland Europe now that we're not in Europe. They don't mean the FTSE, but that might actually end up doing better. So we continue looking at those UK stocks on my approved filtered list. And if you want to know about all of those things, alpeshpatel.com/links. Okay. Now, how are we with Apple? Well, as we've seen, that's now at a resistance. We've got problems with its watch, short-term problems. This is the stochastic, bit of momentum, may drop. Therefore, that probably sideways. That's also called a bearish divergence. I'm getting a little bit in my choice of buy, hold, or sell. I continue holding. This is why we do these broadcasts and we watch it. And we've held it all year. I mean, for God's sake, you've had this massive run. What is that? From 135 to 194, 50% rise-ish. So not too bad so far this year. So we want to keep hold of that money. How best do we do it? Well, Wednesdays and Fridays I do my broadcasts. So it's a hold at the moment. There's your Apple. Okay, what about Alphabet? Well, that's still looking on track to do this. So from that entry point where we got in to now, looks like it's going to be okay. So with this, buy, hold, or sell. Well, I already own it, so I continue holding. But if you put a gun to my head, I would buy more. So call that the Alphabet strategy. So where we are with that. Microsoft, I'd probably also do an Alphabet strategy with this. We remain cautious because we don't get overconfident and cocky because, you know, things can fall and you might get 2 months of it going sideways. So don't get greedy. Don't think, it's gone up. Oh, it's going to continue going up. Could do this for a while, which is probably most likely because things do not tend to just keep going up and up and up. But that's the Alphabet strategy with that, and definitely the Alphabet strategy with Amazon, which is if you put a gun to my head, I'd buy more today. But otherwise, I'm already holding anyway, and we see that going to this. This will, I would expect, in 2024, hit its all-time high again and continue rising thereafter. Okay, Disney is one of the special situations. It's fine. Keep watching it. Keep looking at it. By the way, that's what the banks think, right? So there's your Disney, NVIDIA. Now, the NVIDIA strategy, very simple. I apply it to all my stocks. If it falls X%, we sell Y%. Okay, that's simple. So we continue watching it at the moment. There's no need to sell it, but it is overbought. And when that's happened in the past, we get all these lovely gains. Everyone gets greedy and excited, and then they wonder why it's dropped that much. Right? And we're going to avoid that, because if we avoid that, and I'm going to now come to why your pension stinks, because your fund manager, even if they manage to put money into NVIDIA, which they probably didn't, they put it into emerging markets and they put it into Asia because it sounds good, right? They will have seen it drop this much and they've seen it rise this much this year, and they'll say to you, ha, but actually they got you a 0% return and they missed essentially that gain, because it was only paying for that loss. And that's typical. It doesn't have to be NVIDIA, it could be Meta, it could have been any sorts of things. That's the kind of stuff Scottish Mortgage does. It's the kind of stuff Fundsmith do because they can't go into cash, which is why we watch this every Wednesday and Friday in case we do need to, once in a blue moon, go into cash into something. Because whilst we don't trade our investments, we might need to go into cash, and it's worth the effort because the gains to be had are that I get to double my pension in a couple of years. Whereas, I'm afraid if you're in the UK, you're probably looking at it having moved up 20% in 10 years. That's the difference. Is it worth the effort? Yeah, because 5 minutes of monitoring every week is, what, a couple of hours in a year? Yeah, that's worth retiring early. Thank you. Tesla, from the start of the year when it was a special situation to here, great. Might become a special situation again in January. I'll have another look in January. Keep an eye out. I'll do it then. Meta is very much NVIDIA strategy. Still, it's looking a bit toppy, just like NVIDIA, so be careful. All right, be careful. But we're still in, right? What we don't want to happen with Meta is we ride all of this and then it drops and we end up back like snakes and ladders to all the way back. Remember how annoyed you used to be with snakes and ladders? You thought you won the prize, you got right to the top. And I love my snakes and ladders analogy with the markets. And then you went, oh my God, I've got to start all over again. A bit like life. And you don't want to do that. That's why in February of 2022, we got out of that. And then January of this year, a bit late, you might say, January 7th, I think it was. You can check my Telegram post to see when that was. We got in, and thank you very much. And that's probably shaved a year off my planned retirement date. It's saved me, I can retire 1 year earlier. I'm never going to really retire. If you look at my Instagram, you'll see what I do on my personal time. and why I don't need to retire. There we go. So we're going to do that. That's where that is. NVIDIA strategy. Just keep an eye on it. Cisco. Can't read. And as I said, it periodically does those falls, and it's done it again, and then it reclaims them. So we kept our cool, and it looks like it's doing that again, and should hopefully do that again. Okay, so that's good. Netflix, I don't own, but as I've said before, I look at. Now, if you're a private client of mine on Great Investments Program, then you know you get the 60 slide presentation, which lasts a lot longer. So this is Netflix, so I don't own, but we picked it because it's popular and looks okay at the moment in that direction. So have a look at that. I want to make $1 trillion in wealth for people. Not for myself, well, I won't mind if I had it for myself, but for other people. And the way I'm doing it is teaching 1 million people how to invest so that across their lifetimes, they make an extra million into their pensions more than they otherwise would have done. 1 million times 1 million is $1 trillion. We're on track. It's great because it's democratizing. And when people have got money, guess what? They don't fall onto the state, so it's good for society. Levels up, social mobility, fewer mental health problems, fewer relationship problems, more productive at work. It's great for society. That's my plan. I think that's worth it. I think that's a life well lived. Don't you? Have a look at alpeshpatel.com/links if you'd like me to review your portfolio, or if you'd like to download a free copy of my Financial Times published book, or Investing Unplugged, or any of the books over my shoulder. I think some of them are up on there. Okay. Thank you all very much indeed, and I will speak to you soon.